Hi everybody! Those of you new to the channel, I'm Teresa Perrin. Those of you that are regulars, thank you so much for continuing to follow. And today I want to discuss PEGY with you again. It is up currently in the after hours, but I see some signs of caution, guys, and this could be a bull trap. It may or may not be. It could go in either direction, but there's some things you definitely need to be aware of. So please make sure you stay to the end where I review the chart, because these things could be a sign that PEGY is about to dip. Although we also have some bullish signals showing us that she could be about to rip. So I'm very confused with what the chart is showing. And I think you need to have a plan for both directions. So anyways, let's get started. If you could just smash that like button for me, I'd greatly appreciate it, as it helps with the algorithms. So guys, initially PEGY was red on the day, and the reason for that is because most likely of this press release that Pineapple Energy reports an inducement grant to new chief financial officer. So basically they hired a new CFO and they elected to give him an inducement grant of, somewhere in here it says it like 80 something thousand shares, 82,278 restricted stock units. And basically what those units are is split into thirds. So on each of the first 3 anniversaries, the grant date, they will get 1/3 of those shares. So basically the unit becomes a share under that grant plan. So that's giving him essentially an additional 82,278 shares over 3 years of PEGY. And obviously, well, not obviously, but, you know, the traders did not react initially kindly to that, and the stock did dip today. But in after hours, it suddenly had a new spark of life to it, where it went as high as $7 and change. And guys, as you can see here, which I'm going to discuss more when I go over the chart, but see what I have circled? We on the daily made a big doji with 2 very, very long tails, which is quite confusing because it's very odd. You see that right in the middle. Now, normally a doji candle, at least the ones with the smaller tails, they're a sign of indecision. And generally when you're in an uptrend and you see that doji, it's a signal that the stock is going to move downwards. And I caution you because I will show you the bullish signals as well. But remember, there are 3 gaps, which I'm going to talk about later, that still need to get filled in this stock. I mean, there's no guarantee that they have to, guys, but 9 times out of 10 they do, and we have 3 of them to the upside. So that is very concerning and alarming in my honest opinion. So I cannot not discuss that with you. And we will talk about that more in just a minute. But first of all, there's something else very strange with this stock. According to Fintel, there's no short interest with 0 days to cover because they're not even showing us a short interest percentage. And 0 days, this is the only stock I've ever seen that for. It's very, very strange to me, guys, because we have short volume, which tells me that we have people shorting it. So what the heck? And there's no shares left to borrow. Something's up here. My guess is there's probably a whole ton of naked shorts and they don't want to reveal that. So they're just saying nothing. Again, that's purely speculative and I shouldn't even say that out loud. So forgive me. I take that back. That's allegedly, supposedly, whatever. But guys, 119% is the cost to borrow should any shares become available. But remember, there are none, which makes me think that this could actually continue higher. You know, again, with the alarm, so you need to have a plan for both directions. Now, guys, this is where it gets even more confusing because this is the short volume ratio. So this is the shorting that's going on in the dark pool. Now, why is it that we have a short volume ratio, but we have no short interest showing? And then we have failure to deliver, but no short interest showing. Something's very, very off here, to say the least. Now, the short volume ratio has ranged anywhere between 21.25. I missed that one above it, and 56.31%. And guys, Today, it was 54.9%. So it seems like the shorts really took advantage of that article. And perhaps that wasn't even retail selling. Perhaps it was shorts trying to push the price down on that news. Perhaps that spike we see in the after hours is them either, deciding, oh, God, we got to return these shares and returning them, or, people buying in on the dip. I don't know what to tell you on that one. It's intriguing me, and the chart is very intriguing just because it's so very mixed signals. Anyways, guys, the failure to delivers, if they have not been covered already, which my guess is that the majority of them have, but if not, they need to come up with 10,640 shares for tomorrow. But based on the following day, there were none. I'm guessing this got covered. Then again, who knows? Because the stock, I'm telling you, something's very, very off. Guys, you can speculate on your own. Let's get into the chart review. Okay, guys, so here's where I am going to urge you to err on the side of caution with PEGY, because looking at the daily chart, it's always important that we zoom out. We get some positive, but we also have some very cautionary things to look at. Now, the positive is that our smaller moving averages are starting to cross above our larger moving averages. And what I mean by that is this green line is the 13 SMA, the blue is the 20 SMA, and it is crossing above our 48 SMA. SMA, guys, is simple moving averages. So this is very bullish when this happens. However, I see some things that are cautionary in my honest opinion, and I would be doing you a disservice if I do not mention them. I know that PEGY is currently running in the after hours, but part of me says, is this a bull trap? Are they going to come back and fill these gaps and trap a lot of people up at the top? Or is this going to continue and these gaps just get left behind? Guys, either way, I don't know. Anything could happen, right? But you need to be aware and have a plan for both things. And this is certainly not a point where I would be considering jumping into this trade just because of these issues. Now, PEGY has gaps at $1.59 to $2.08, $3.04 to $3.21, and $5.20 to $5.38. Guys, those gaps mean something. 9 times out of 10, they come back and fill the gaps. And we know that this, clearly has 3 of them that it can come back and fill. So might it continue running higher first? It's definitely possible, given the moving average crossing over. However, I want you to all be very cautious because it could pull back and then come back down and then begin its run again. So I just don't want anyone to get trapped, which is why I'm trying to give you some caution here. Now, we're still looking good on the 4-hour with the 13 staying above the 48 SMA. And obviously on the daily chart, we had a massive gap up in the after hours. And it's starting to pull back a little bit now. But guys, this is a huge, huge run up. And we got the 1348 crossover around 1 p.m. and it never crossed back under. And after hours, we get this big move. So again, I just want to make sure that you guys know what the cautions are and that it could go in either direction tomorrow. So please, please be cautious with this trade. And if you're thinking about getting in, please be mindful of that, because when this pulls back, it's going to pull back hard, in my opinion, if it pulls back. I mean, there is always a chance those gaps get filled later down the line, not necessarily tomorrow, next week, who knows? But there's also a chance it could come back and fill them. So you need to look at both sides of the trade and have a plan. All right, guys, thanks so much for watching and enjoy the rest of your night.